Nvidia, NVDA, has surged to the top of market conversations as conflicting headlines around China's demand for its H200 AI chips spark sharp intraday volatility and divide investor opinion. On one hand, reports suggest China could approve H200 purchases as soon as this quarter, according to Bloomberg. On the other, new details about Nvidia's unusually strict sales terms for Chinese customers are raising questions about near term revenue visibility and geopolitical risk. According to sources familiar with the matter, Nvidia is now requiring full upfront payment from Chinese buyers seeking its H200 artificial intelligence chips, a notable departure from prior practices. Under the new terms, customers must pay in full at the time of order, with no ability to cancel, request refunds, or alter configurations after placement. In select cases, NVIDIA may accept commercial insurance or asset backed collateral instead of cash, but flexibility appears limited. Historically, NVIDIA often required advance payments from Chinese clients, but buyers were sometimes allowed to place deposits rather than remit full payment upfront. The stricter enforcement around the H200 reflects uncertainty over regulatory approvals, particularly whether Beijing will formally greenlight shipments amid ongoing US China tech tensions. From NVIDIA's perspective, the move acts as a risk hedge, ensuring it does not build inventory or allocate scarce supply without guaranteed payment in a politically sensitive environment. At the same time, a separate Bloomberg report suggesting China may approve H200 purchases as early as this quarter injected optimism back into the stock, fueling whipsaw price action. Traders have been reacting in real time to each headline, with sentiment flipping between caution and renewed bullishness throughout the session. Importantly, CEO Jensen Huang has sought to calm longer term concerns, expressing confidence that NVIDIA's next generation Rubin AI chips will be available in China in time. That comment is being closely watched by investors, as it signals NVIDIA's intent to remain engaged with the Chinese market despite tightening export controls and regulatory uncertainty. While some traders are questioning the stock's immediate price action and the sustainability of near term China driven upside, bullish sentiment still dominates the broader narrative. Optimists point to a wave of recent analyst upgrades and growing recognition that NVIDIA is no longer just a GPU company, but a full stack AI infrastructure provider. Particular attention is being paid to NVIDIA's rapidly accelerating networking business, including high speed interconnects and AI data center fabric, which many see as essential for next generation AI systems and a powerful secondary growth engine. In short, the strict upfront payment terms highlight NVIDIA's caution and risk management amid geopolitical uncertainty. Potential Chinese approval of H200 shipments remains a meaningful upside catalyst. Longer term bulls are focused less on quarter to quarter China noise and more on NVIDIA's expanding role across AI compute, networking, and future chip platforms like Rubin. For now, NVDA's volatility reflects headline driven uncertainty, but the underlying debate remains the same whether near term geopolitical friction can meaningfully derail what many still see as NVIDIA's dominant multi year AI growth story.
So the extrapolation of its 3-day moving average is suggesting that yeah, it might continue to trend up slightly towards the end of this month. Ultimately, there's just a consolidation that is expected going all the way towards yeah, middle of February. Projections are currently saying 188.76, 195.81, 200.16. Yeah, let's just quickly glance at its 4 hour chart to see what's going on. On the 4 hour chart, yeah, consolidation as well is what is expected at least up till the middle of this January. Projections are currently saying Beginning from the least, we have 183.22, 184.73, 187.19, 193.52, 196.33, 198.07. Okay, thank you very much for watching this video.